Yes, people, a very happy evening to all of you. So, guys, we started with a brand new topic in the last class. What brand new topic? We started the subject brand newly in the last class, which was Introduction to Accounts. So, what did we learn in the last class, people? We just learned the answer for the three simple questions in the simple manner. So, what is accounting? Sir, accounting means to count. Accounting means to count. Sir, what are we trying to count here? Very simple. If you remember the example that we that we went for that field trip, the money that you collected from your parents. So your amount received 5,000. We have to keep a count of that. Now you will ask, sir, what count I have to keep? 5,000. I know it is there. Now this 5,000 has come from one source. Imagine this 5,000 has come from multiple source. 2,000 your dad gave, 2,000 your mom gave, 1,000 your relative came. 3 years ago, sorry, 1 year ago or 6 months ago, your relative came. But we have the habit, no, relative comes to our home, they'll give some 100, 200. Now that 100, 200 is gone. If they don't give 1,000 rupees, they're not relatives. So at least 1,000 rupees you should get from them. So now what did you do? Whatever money came in, you made a note of it. So relative gave 1,000 rupees. Mom gave 2,000 rupees. Dad gave 2,000 rupees. So you should know the source of money coming in. So accounting will help you to understand from which all sources the money came in. First. So accounting means to count from which all sources the money came in. Second is to count what is your total expenditure. So what did you do? You made a note of all your expenditure that you incurred. And totally you said that, okay, total expenditure, the total count of expenditure is 3,850. So you got the count of the expenditure. Not only that, your dad further asked how much money specifically you spent for food. So you said for breakfast, lunch, and snacks put together, how much you spent? Breakfast 300, lunch 750, and snacks 300. How much? 1,050. 1,350. 1,350 you spent. So how could you keep a track of? Also, how could you tell your dad, or how could you tell your parents that you spent 1,350 on your food or 1,300 on your food? How did you? How could you say that? Because you had a account of it, and all the common category item, food item, you circled, and you said that okay, for food I spent this much in total. So you counted the total food expenditure. So accounting is for counting. Accounting is for counting, and you finally counted that how much balance of money is left in hand. From this 5,000 rupees, the 3,850 what you spent. So balance money in hand. So if somebody asks you what is the count of the balance money in hand, 1,150. So who gave this information, or based on what you could have this information? Because of accounting. So first meaning of accounting is accounting means to count in simple language, in layman language. Second, sir, why accounting? Sir, this accounting, what you're going to do, it is going to convey some information. So you're going to analyze the information. What is information? Sir, from which all sources the money came in? To which all sources the money was spent? Any place the money was overspent? Any place the money was underspent? So like that, you have to draw a lot of analysis out of it. For that reason, what is helpful for us? Accounting is helpful for us. If you remember, we also took an example of business. Remember? What happened here? You started a mobile shop business. You purchased 10 phones. So if I ask you, what is the total worth of phones that you purchased? You say 1 lakh. So how did you know 1 lakh? Because you made account of it. In business, do you purchase phone only once a year? Throughout the year, how many times you'll buy? So for the entire 1 year, if I ask you, what is the total purchase? How will you be able to tell instantly, boss? Do we have that much sharp memory that everything will remember? No. We are Gajani. You know who's Gajani? That Mota boss. He forgets everything, remembers everything in the body. Like that, will you write on the body? Oh, purchase, total purchase. Oh, here it is. 2 lakh. Oh, sale somewhere here. Will you say that? No. You have to write it on a piece of paper in a systematic manner. So what is accounting? Accounting is to count. Count what? What is the total purchase in the business? What is the total sale in the business? What is the total salary paid to my employee? What is the total rent that I pay to the owner? So all that I'll get to know from where? Accounting. So accounting means to count. And why accounting is required? So that I'll get to know from where all money came in. See, when you're into mobile phone business, what do? You also do the servicing, no? So income is generated by selling mobile. Income is generated by servicing the mobile. Income is generated by selling the additional things. When you have mobile shop, you sell mobile cover also. There's so many additional accessories you sell. So from that sources of money came in. So as a businessman, would I not want to know from which all sources the money came, or from which all sources the income came? So how will you keep a track of all this? Only by accounts. Because in memory, we cannot remember everything. So accounting helps you to do analysis. And using this analysis, you can draw some future conclusion. Okay, this month you targeted by selling mobile phone, you should earn a profit of 30,000. But by selling mobile phone, you could earn only 20,000. So which means you have to work more hard to sell more mobile phones in the next month. You thought by selling accessories this month, I'll earn 20,000 rupees, but you could earn only 5,000 rupees. So now you have to focus on strategies, how you can sell more accessories so that more profit can be earned. So how did you know that you earn less profit? You had a target in hand. You had accounting data in hand. So you had the budget in hand. You know what is budget? Budget is your estimation. I'm estimating my sale to be this much, but it happened this much. So if budget is not there, if the real accounts is not there, how will you compare? Kana, from last class, I see you are continuously lost. I've seen there also, here also. That should not happen, no? Right? So you're comparing the data. You're comparing the budgeted data with the actual data. How? Only because of accounting. If accounting is what was not there, will all this be possible? Not possible. So do you understand the essence of accounting? What is accounting and why do we need accounting? Because accounting, through accounting, will get so much of information today. Based on that, you can make the future decisions, which can help make the business more profitable. So two simple questions: why account? What is accounting and why accounting? The third question was, why do we have accounting rules? So you remember we saw this question. This question I gave you and you came out with two different answers. So imagine the real world. This is very simple three transaction. One is purchase transaction, one is sale transaction, one is expense transaction. In business, imagine how many transactions will happen. Different varieties. So accountant, if the rules is not there, each accountant will try to record a transaction the way they feel like doing it. So if each of them try to give me a different answer for one question, as a owner, on which answer should I rely upon? Accountant 1 is telling that the profit is 10,000. Accountant 2 is saying the profit is 12,000. Accountant 3 is saying that my profit is 5,000. As a owner, will I not go mad? So for one question, three different answer means what? Somewhere something is wrong. Which means what? The basis on which the account is prepared, the base is not concrete. Each one is trying to do the accounts in their own way. So it is very essential to have the accounting rules, accounting policy, accounting principles in place so that for a given question, when you solve it, each one should come out with the same answer. So that is why the need of the accounting rules, need of accounting policies and principle has arisen. If these policies and principles are not in place, each one will try to do accounts in the way they want to do it. Ultimately, you'll get different answer. And as an owner, I'll always have a confusion to rely on which answer. Not only me, there'll be problem with the investor. Investor is also confused. One accountant is seeing this profit, another accountant is seeing that profit. As an investor, what is my profit? I'll be confused. Government will have a problem. More specifically, the income tax department of the government branch will have a problem because on that profit only you are supposed to calculate tax. So he will not know which profit should I take to calculate tax. Banker will have a problem because banker is giving the loan looking at your earning capacity, looking at your profit. More profit, more loan. Less profit, less loan. No profit, no loan. So if accounting is not proper, the banker will not get the confidence on you. He will not give you the loan. So it is very essential for us to have the accounting rules and regulations in place. Should this be understood? And what else did we see in the last class? So then you showed one picture of old man. He's called as Sir Luca di Pacioli. Who is he? He's an Italian mathematician. So in our country, we call him as father of accounting. So his father of accounting, Sir Luca di Pacioli. He's an Italian mathematician. He's the one who has conceptualized the concept of double entry system of accounting. So what is the meaning of double entry system of accounting is something you learn in the upcoming class. Now, I'll start reading this technically. Now, guys, we're going to technically understand what is accounting all about. So now this is a definition. If you look at the T.S. Grewal book, for accounting, there's multiple definition being given. There's a meaning that has been given here. Accounting is a systematic process of recording, classifying, summarizing, analyzing, interpreting financial transaction, communicating the results thereof. Now, if you come down to American Institute of Certified Public Accountant, they have their own definition. If you come to Smith and Ashburn, they have their own definition. If you come to American Association Accounting, it says the accounting is process of identifying, measuring, communicating. If you come down, the characteristic of accounting. So from that, they have started identification, measuring, recording, classifying, summarizing, analyzing, interpreting, communication. Like this, if I teach, what will happen? Will you understand head and tail also? Not possible. Have you all seen this movie called as Three Idiots? In Tamil, it is called as Nanban. Have you seen? There's a particular scene in that movie where Amir Khan or Vijay is sitting in the class, and that professor is, teaching something about machinery. So that fellow, looks at like this and he laughs at the teacher. I mean, he's enjoying that atmosphere. So the teacher is asking, like, why are you laughing? He says that, sir, it was my dream to be in this college, and today I'm sitting here. I feel very happy being here. Then the professor says that, stop being happy. Tell me the definition of machine. So what does he say? Sir, machine means that anything which reduces the burden of human being, which reduces the efforts of human being. That is called as machine. He says that I don't want simple language. I want textbook language. He asks example. He says that fan, click on the button, machine, zip up, down, machine. You remember that scene? So what happened? He was trying to explain it in simple language, but the professor did not want to listen in a simple language. He says, I want proper textbook definition. Then in 3 days, this person called as Chatur. And in Tamil, I think it is, I forgot the name. Chatur Lamlingam is in Hindi. The Tamil movie, I think it is somebody, I forgot the name. So he gives the definition of machinery, the technical definition of machinery. We cannot remember. That's why we are in commerce, no? Otherwise, we would have been in the science. So we cannot remember. But accounts, we have something like this. You know what? You know what is it? Accounting is systematic process of identifying a business financial transaction, measuring in terms of money, recording through journal, classifying through ledger, trial balance, financial statement, communicating, analyzing, interpreting thereof to the users of financial statement. Like that, if I teach, if I say, will you understand head and tail? No. Correct? No? So now we'll understand the entire meaning in one class. We'll take one class to understand this. There's got a lot of points to be discussed. And to be very honest, each and every point is one chapter. Each and every point is one chapter. Let's focus on this. So what is accounting? Accounting is a systematic process. What does system means? Sir, system means rules and the procedure to follow the rules. Guys, we are surrounded by rules. You're sitting in this academy, this moment. You are governed by the rules and regulation of this academy. Whatever the rules and regulations the academy is laid down, you are bound to follow. The moment you step out of the academy, you are governed by the rules and regulation of this complex. So whatever the rule complex says, you have to follow. The moment you get on the road, you have to follow the rules and regulations laid down by RTO. From there, if you get into your apartment, then there's a rules and regulations that you have to follow of your apartment. The moment you enter your house, you have to follow the rules and regulations of your parents, more specifically your dad. If dad is dominating, dad. If mom is dominating, mom. You can decide whatever you want to decide. The moment you get into your room, if you have elder brother and sister, you are bound by the rules and regulations of your elder brother and sister. So the ultimate control you have on your life is only in bathroom. You cry, you laugh, whatever you want to do, everything in bathroom. Nothing else. So like that, we are surrounded by rules and regulations. And why rules is required, we understood in the last class and in the beginning of today's class. If the rules is not there in place, the system is not there in place, if procedure is not there in place, each accountant will try to do the accounts in their own way, getting the different answer for the same situation, which will lead to confusion and chaos for all the stakeholders, owners, government, bankers, investors. So it is important for us to have a system in place. So for accounting, there's a proper and a robust system that has been established. And today you are here to learn those systems. The system which is tried, tested, and is 100% adopted by the industry across the world. That system is what you're going to learn today and going to apply in the future. When you do your business or you go to job, wherever you go, this is what you're going to apply. So accounting is a systematic process of what? Sir, identifying of what? If you see the textbook, they've said identification. If you come to the definition of American Accounting Association, they said that accounting is a process of identifying. But identification of what? Sir, identification of a business, financial transaction, and event. So first you have to understand what is event, what is transaction, what is financial, what is business. Then second is measuring. Accounting is a systematic process of identifying business, financial transaction, and event. And then measuring. Measuring what? Measurement means what? Measurement in terms of money. Money and common denomination of rupees. In India, it is INR. So you have to measure that in terms of common denomination. The most famous denomination in our country is INR. And then recording. Accounting is a systematic process of identifying, measuring, and recording. Recording where? In the journal. So journal, there's a separate chapter. Chapter number 8 is journal. Separate chapter on journal. Then once you record in journal, you're supposed to classify. Classify where? Ledger. Separate chapter of ledger. Once you classify, you have to summarize. Summarize in form of TB. TB means trial balance. P&L means profit and loss account and balance sheet. For this, there's a separate chapter. Trial balance, separate chapter. P&L and balance sheet, separate 2 chapters. Then interpreting and analyzing. So whatever accounts you prepared, what are we supposed to do? Sir, analyze from which source money came in to which source money went out. So there are different ways of analyzing it. So for this, the chapter is there, but not in 11th standard, but in 12th standard. And then you make the communication of the same to the users of financial statement. Who are the users of the financial statement? Owners, bankers, investors. These are the users. What is financial statement or financial information? The accounts that you prepare, the P&L and balance sheet. This is called as financial statement. So now what I did is just a summary. I'm going to break down into parts. Each and every point I'm going to discuss. So first, let's talk about identification. So what are we trying to identify? So we're trying to identify a business financial transaction event. So first, let's focus on transaction. What is a transaction? So transaction means transaction. If you divide into 2 parts, trans means through. Action means to do, which means we are trying to do something through somebody. I want to buy phone and sell phone. So I'm buying the phone through the wholesaler. I'm buying the phone to the wholesaler to sell it to my customer. So transaction means what? Performance of an act. If I buy from the wholesaler, it is called as buying activity. If I sell it to the customer, it is called as selling activity. So what is transaction? Performance of an activity. In this activity, what happens? This activity involves exchange or transfer of goods. Exchange or transfer of goods. So I go to the wholesaler. I go to the manufacturer of the mobile phone. What do? I take the goods from him. So goods were originally under his custody, under his control, under his ownership. When I buy it, it comes under my control, my custody, my ownership. Before I buy the goods from the manufacturer, the phone, who was the owner of the phone? The manufacturer. The moment I buy it, who becomes the owner? I become the owner. So when I bought the goods, it involves exchange of goods. And when I sell it to my customer, again, I'm handing over these goods to my customer. The ownership is changing. So again, selling is also a transaction. So this transaction will involve exchange of goods, will involve exchange of service. Now, what are you guys doing? Taking from me goods or service? Service. I'm giving you the teaching service. So what are we exchanging? The knowledge. We are exchanging the knowledge. So this is a service. No? So between us, this is a transaction. You have a bank account? No. So your parents will have a bank account. So sometimes what they do, whatever the money in hand is there, cash in hand, they'll go and deposit in bank. Or if they want money, they'll go withdraw it from ATM. So what happens? Between you and bank, are you exchanging any goods and service? No. We're exchanging money, funds. So what is transaction? Transaction is nothing but exchange of either goods or service or funds. This is called as transaction. So an activity which involves transfer of money or money's worth from one person to another person. So every transaction will involve minimum 2%, guys. Every transaction will involve minimum 2%. More than 2 also possible, but minimum 2. In that, one person is the business and one person is the third party. So when I am buying the goods from the manufacturer, how many persons are involved? 2%. One is business, I am buying it. And second is the manufacturer, who is the third party. When I'm selling the goods to my customer, how many people are involved? 2 people involved. When you sell it, I am selling to my customer. I am involved. Customer is involved. So business is involved. Third party. Customer is a third party to me. Third party means what? Who's got no relation with the business. So in that, one person is business and the other person is the third party. So this is transaction. Example. Ram. Who's Ram? We are Ram. Ram purchases chair from Raja on cash. So in this transaction, what is happening? There are 2 people involved. One, Ram, business, is involved. Second, Raja is involved. So these are the 2 parties. And between them, what is being exchanged? First product. So Ram is purchasing from Raja. Sorry, Ram is purchasing means Ram purchases. Okay, we are buying. So we are business. So we are buying. So we are receiving goods. And will we receive the goods free of cost? No. We have to pay the money for it. So goods and cash. So what is being exchanged? So 2 things are being exchanged. Goods is being exchanged for cash. So goods exchange, cash exchange. So can I call this as a transaction? Yes. Second, Ram purchases chair from Raja on credit. So there are two types of transaction. One is cash transaction. Second is credit transaction. What is cash transaction? I buy the goods. Immediately have to pay the money. Immediately have to pay the money. Means what? Cash transaction. I buy the goods. I have to pay later. Credit transaction. So here, Ram, business is involved and Raja is involved. So again, we are buying the chairs, but funds is not going now. So people will think that buying the goods, immediately paying is a transaction. No. Between them, if any one is getting exchanged, also it is transaction. So in this case, what is getting exchanged? Only chair is getting exchanged. Still, it is a transaction. In the previous case, what got exchanged? Chair got exchanged, cash got exchanged. So you should not think that whenever chair and cash both exchange simultaneously, it is transaction. No. If any one thing also is exchanged, it is a transaction. Either goods or service or funds or both. Clear with this point? Now, Ram pays salary to Geeta. Ram is business. Geeta is the third party. So in every transaction, two people involved. So here what is happening? What is getting exchanged? Cash is getting exchanged. Easy. So this is called as transaction. Transaction means what? Exchange of goods or service or funds between two persons. In that one person is business, another person is the third party. One is business, another is the third party. This is called as transaction. So now, if these kind of transaction is given in question to you, will you be able to identify and tell this is transaction? Yes, because you understood the meaning of transaction now. Next comes the event. Event means what? The consequences of the transaction. When you buy the goods, transaction. When you sell the goods, is a transaction. These two results, sorry, these two transactions combined, you have the end result called as profit. So whenever you get for a transaction the end result, that is called as event. So profit is something is the end result of the business. So that profit is called as event. Closing inventory means what? You purchased 10 mobile phone yesterday, correct? In the example that we gave yesterday, people, you purchased 10 mobile phones. In that, how many mobile phones we sold? 6 we sold. So how much is balance in hand? 4. So buying of mobile phone is a transaction. Selling of mobile phone is a transaction. But the closing stock 4 which is there in hand, will I call this as a transaction? No, because for this 4 I never exchanged anything. Whatever I was supposed to be exchanged was exchanged earlier. So now this 4 is what? Result. And this result is termed as event. And this is called as closing inventory. Inventory means what? Stock. The 4 phones that is left in my hand, no, that is called as stock. Stock, in other words, is called as inventory. So when you do a transaction or multiple transactions put together, it will give you a result of something. That result is called as event. So you should be able to identify in a business what is transaction and what is event. For a transaction, different rule. For an event, there's a different rule of accounting. So first step is what? Identification of a business, financial transaction and event. So in that, what did we learn so far? Sir, how to identify a transaction and how to identify an event we understood. So transaction, event, understood or not understood. Now, this should have a financial value to it. So when you buy the chair, that chair should have a monetary value. Means what? If I'm buying a chair, 10,000 worth of chair, even though I'm paying it later, but the chair when I'm buying it, it has got some value or not. If it has got some value, only that value I can record. No? Accounting is what? Recording the numbers. Accounting means what? Recording the numbers. Now let's suppose there is a staff coming for an interview tomorrow. So I take the interview. Interview goes well. I appoint that staff. For that I sign a contract. So signing a contract, I'm signing the contract of the staff, employee and handing over to employee. Is this a transaction? Yes. Because in this there is exchange of service. The transaction means what? It's a commitment. It's a commitment. So it is a transaction. So now here I'm giving a contract to the opposite party. It's a contract for service. It's a contract for service. But this contract, what I've done, or the letter that I gave, can I record in accounts? Can I record this in accounts? Purchase you can record. I purchased 10 mobile phone of 10,000. So 10,000 to 10 means what? 1 lakh. You can quantify the purchase. Here can you quantify? I appointed a staff. Can I quantify that? What entry will you pass? What will you record? I appointed staff for 10 lakh rupees. Yeah? 10 lakh rupees is worth when you pay the money, then that is called as value. So when you identify a transaction, ensure that transaction has got some financial or monetary value attached to it. A transaction event should have some monetary value attached. When I say closing stock, 4 mobile phone, what is the worth of 4 mobile phone? So 4 mobile phone into 10,000, 40,000 the worth. So the money's worth, the product's worth has to be there with the transaction. If the transaction is entered, there's no worth, then I cannot record in accounting. So what are we trying to identify? We're trying to identify a financial transaction event, because once you identify this, only then you have to record it. So there's so many transactions happening, no? So which transaction I should record in accounts, which I should not record? How will you know without knowing this concept? So the transaction event, which has got a monetary value attached to it, which has got a finance means what? Paisa, which has got monetary value attached to it. That transaction is what we have to record in accounts. Anything and everything that is happening in the business, you cannot record. Are you clear with this point? Second, these financial transaction and events should happen in the course of business. Well, let's suppose I'm going for a movie. So I buy a ticket from the theater. So is this a transaction? It's a 100% transaction between me and the theater owner. And we are exchanging what ticket, which is a service. Transaction? Yes. Is this transaction having a financial value attached? Yes. The movie ticket value is 300 rupees. So financial. Can I record this in business? So this is my personal life. I should not record my personal expenditure in business. If I record everything in business, personal business, everything will become khichdi. You will not know what is the business result. So which financial transaction you should record in business? So the transaction which is happening in the event of business or for doing the business, that only I'm supposed to record. So if this statement was not given, what will happen? Everybody will record every transaction. Personal transaction will record, business transaction also they'll record, everything they record. So will you get the genuine profit? No. So what is the first step? When a question is given to you, you should first check in these, which are all transaction, which are all event. If you say this is transaction, whether this transaction has got money or not, financial value or not, you have to see. Third, you have to see whether this transaction is happening in the business or personal life. So you'll pick out of so many transactions, you'll pick and choose those transactions which are having the financial impact in the business. So first step is identifying business, financial transaction and event. In this, if you have any doubts, please ask me now. In this, if you have any doubts, please ask me now. Online people. If all of you are clear, I'll go to the next part. I think one person left online. I don't know who left. Okay, Hitan should, I think Harshit would have left. Okay, I said it. Sir, not able to understand, correct. Because if you miss the first class, it's very difficult. Done, no problem. Identification is done. Second, sir, measurement. Measuring in terms of money. Measuring in terms of money. One part of this explanation I already gave here. Measuring in terms of finance, money, explain. So what does another aspect mean? There are two aspects. Measuring in terms of money has got two aspects. One, it should have a monetary value attached. Second, this monetary value should be of common denomination, same denomination. Sir, what do you mean by that? I'll tell you. Now, let's suppose I purchased 10 mobile phones from New Delhi. So 10 mobile phone, each costing 10,000 rupees. How much is my total purchase value? Sir, 1 lakh rupees. Then I went to China. I liked one particular mobile phone model. So from China, let's say not China, I went to America. So I went to America, lovely new model phone, super brand, I purchased it. I purchased again 10 mobile phone and I paid the US dollars. So let's suppose the dollar there was $300. $300. If you multiply how much it is? $3,000. So this is rupees 1 lakh and this is dollar 3,000. So can I say my total purchase is 1 lakh 3,000? Can I say the total purchase is 1 lakh 3,000? Sir, in mathematics, for you to add two variables, they should be of same unit of measurement. Same unit of measurement. Kg with kg I can add, but kg I can never add with liters, pounds. I can never add. It should be of common unit of measurement. So here in India, what is the unit of measurement? INR, rupees. So what is your first step? To add these both, what you're supposed to do? Make it common denomination. So now this is $3,000. What is per dollar value? 80 rupees. 80 rupees per dollar. I paid $3,000. So multiply with 80. So how much? Rupees 2,40,000 or 24. 2,40,000. And this is rupees 1 lakh. Now if I add these 2 and say my total purchase is worth 3,40,000. Now this makes sense? Yes, because both are common unit of measurement. Because we are not restricted to buy only in India, no? We are not restricted to sell only in India, no? We can do worldwide purchase, we can do worldwide sale, which means we'll be dealing with multiple countries, and those multiple countries are dealing with multiple currencies. To buy in dollars, sell in euro, buy in dirham, sell in yen. So multiple currencies, when you're exchanging, you have to have a common denomination. So that's why the rule said that you buy from wherever you want, you sell to wherever you want, but ensure at the end of the day, all the dollar values are converted to INR. The pound value, the yen value, everything is converted to INR. So that is because of this measuring concept. If this point was not there, people wouldn't have done this. So measuring in terms of price or money. Now clear? Now you identified the transaction. You have got the monetary value also. Now you got 3,40,000. What will you do? You'll take a piece of paper. Oh, purchase from so and so party 3,40,000. Will you like wherever you feel like writing? You'll take a notebook, rule notebook and write. Will you take a A4 sheet and write? No. In accounts, we have a system in place. So system says that you cannot record wherever you feel like recording. You will record where I say. You will record in that format which I want you to record. So here the recording happens through journal. So there is a format given. There's a particular way given. In that particular way only you're supposed to record it. So recording is the first stage of documenting the value. Because in identifying the transaction and measuring transaction, you never recorded anything. You everything calculated in mind. But accounting begins where? Where is the first stage of accounting? Where is the origin of accounting happening? Recording, which is happening through journal. So there's a separate chapter. In that chapter, I'll be teaching you how the journal format is to be created. We'll take some time to reach to journal. So recording happens through journal, and the recording happens in the chronological order. Means what? As and when the transaction is taking place, you have to keep on recording. Today's transaction, today only you're supposed to record, not tomorrow. Tomorrow's transaction, tomorrow only you have to record, not day after tomorrow. This is what the chronological order means. If you record today's transaction tomorrow, it is wrong. If you record tomorrow's transaction day after tomorrow, that is also wrong. Today's transaction today only. Tomorrow's transaction tomorrow only. So this is what the chronology means about. If you look at the format of journal, which you'll study in the upcoming chapter, the format of the journal does not facilitate the totaling. Now, what happens in journal, I tell you. So first step is identifying a business financial transaction and measuring in terms of money. Now, when you record in journal, guys, what happens is, you record all the transaction one by one after the other. Means what? Today morning you did purchase, so you recorded purchase. Afternoon you did sales, you recorded sales. Everything is happening in one order. Tomorrow morning again you are left some goods left, so again you did sales, you recorded. Then you went to shop and bought, so again purchase. Then a customer came in, you wanted to get them refreshment, tea, coffee and all. So then tea, coffee expenses. Then again you sold the goods. So it is going in same order, which means what? All the transactions are recorded as and when they are taking place, one after the other. This is what is journal. The format is different. I'm not teaching the format. I'm telling you in journal what happens. You record all the transaction. Can I say this is a transaction? Buying is one transaction. You recorded, let's say, in journal. Then sales you recorded. Like that in chronological order. In one order, you keep on recording it. Like that you record it for 1 year. After 1 year, if I tell you, please tell me what is the total purchase of the business. Does this format of journal facilitate the totaling? How will you total here? Purchase is recorded here. Then after that is recorded here. Then again purchase is recorded here. Will you manually sit and calculate? Let's suppose in a year you're doing 1,000 purchases. 1,000 times will you sit and calculator? Oh, this plus this plus this plus. So journal is good, but there's a disadvantage of journal is that it does not help you in totaling. If I want to know what is my total purchase, if I want to know what is my total sales, if I want to know what is the total salary paid to my staff for the entire year, that is also missing. So what do we do? For the purpose of totaling, we transfer all this transaction from journal to ledger. If I have to relate this, I can relate that journal is like this bucket. In this bucket, there are orange balls. In this bucket, there are purple balls. In this bucket, there are green balls. In this bucket, there are black balls. In this bucket, there are blue balls. In this bucket, there are red balls. Sir, enough, sir. Okay. Pink, pink. Now keep this bucket very far away. You are sitting here. If I tell you, please tell me inside how many black balls are there. Will you be able to tell me? Possible? Not possible. So journal is like that. You record all the transaction in one place, called as journal. This entire box is called as journal. You record in order, one after the other. You kept on throwing the ball. If you tell me, so please total and tell me how much is black ball. Am I in position to tell? Not possible. So this format does not facilitate the totaling. So what do? From that, you shift everything to different category. So orange ball should be shifted to orange bucket. Purple ball will be shifted to purple bucket. Green ball will be shifted to green bucket. Black ball to black bucket. Blue ball to blue bucket. Pink, no? Pink ball to pink bucket. So orange ones are going here. All the orange ones will collect it here. All the green ones will go here. All the purple ones will go here. Now this process is called as classifying. Next stage. Classifying. You are classifying into different colors. So in ledger there is no color. What is this color depicting? What is this color representing? Sir, orange means purchase. Sir, isn't real orange means purchase? No, I'm just giving example. Maybe this purple means sales. Maybe the green means salary. Maybe this black one means rent. Maybe this blue means something else. So now when you transfer it to different bucket, now you are in position to total it. Now you transfer everything to purchase. So can I go to the purchase account? So this bucket is called as account. Account is a place where each and every this is purchase account, sale account. So account is like a T-shaped ledger that we'll discuss in ledger topic in detail. So here now you take the orange bucket. Now you are able to count it. So here, if I give this bucket in hand also, forget distance. If I give in hand, will you be able to count it? Very difficult. For counting, you have to take everything out only. So that is what you're doing. No. So what are you doing? You're taking it out, putting in orange bucket, taking it out, putting in purple bucket, so that you can count it. So now ledger is prepared for the purpose of counting it. Accounting means what? To count. So now because of ledger, we're able to total and tell how much is my total purchase at the end of the year. What is my total sales at the end of the year? What is my total salary paid at the end of the year? What is the total rent at the end of the year? Total electricity end of the year? Total marketing expenses at the end of the year? So what is the purpose of ledger? To classify all the accounts in multiple category for the purpose of totaling. For the purpose of totaling. So that is called as classification in ledger format. And from ledger, what do? We shift it to trial balance. So there's a purpose why we prepare the trial balance, which I'll explain in the trial balance chapter. Then what happens? To come back. From ledger, you transfer everything to trial balance. And from trial balance, what do? All the items which has got the flavor of, income, gain, expenses, and losses will be shifted to trading and P&L account. To find out what? To find out the financial performance of the business. How do I know the business is doing excellently well? How do I know the performance of the business? By checking the profit and loss of the business. If the business is into profit, doing well, super profit, super performance. So how do you measure a business's performance? How do you say Reliance is doing well? Reliance is a super company, excellent company. How do you say on what basis? Their profit. So profit and loss, evaluating the profit and loss of any business is called as evaluating the financial performance. So how do you evaluate the financial performance? By preparing the trading and P&L account. So trading and P&L account is that statement, that document that you have to prepare to find out the profit and loss of the business. So how do I calculate profit and loss? Sir, from income and gain, if I minus expense and losses, I get profit and loss. That's what we did, no? Purchase, you remember yesterday? We had sale. Income is how much? Sale. We had sale. What is the example here? So 80,000 was profit. How did we get this? So 1,20,000 was my income. With that 40,000 expenses we subtracted. Then we got 80,000 profit. So 1,80,000 was the sale in the first case. 60,000 was the purchase of the 6 mobile phones. 20,000 was the marketing expenses. So 1 lakh is my profit. So how do you get profit? So from income, I have to minus all the expenses to get the profit. So in the trading and P&L account, what do you record? Sir, income, gain, expense and losses. So from income and gain, you minus expense and losses to get profit and loss. If income is more, expense is less, what will you get? Profit. If expense and loss is more, income is less, loss. Easy. So that is identified. So where do you get that information of profit and loss? In the trading and P&L account. Sir, from the trial balance, income, gain, expense, loss is transferred. So everything is transferred or anything is pending? Pending. All the other items which has got the flavor of asset, liability, capital will be transferred to balance sheet. So what is asset? What is liability? What is capital? I'll teach you in the next class. Because next 4 class, what are we going to deal with? Basic accounting terms. What is asset? Under asset, what all will come? What is P&L? Under that, what will come? What is liability? Under that, what will come? So there are so many terms you're going to learn for the very first time. So 4 classes or 3 classes exclusively only on understanding the terms that I'm going to spend. If I had to give a small example, you got 1 lakh rupees as profit. No? So this is what? Financial performance. If I want to know in this situation for this question, what is the money in hand? What is the cash in hand left? What will be the answer? What is the cash in hand? To calculate the profit, there is one procedure. So what did you do? Sir, I recorded the sale of 6 mobile phones. What is the sale of 6 mobile phone? 6 mobile phone into 30 rupees per mobile phone. Sorry, 30,000 rupees per mobile phone. 1,80,000 minus purchase of 6 mobile phone. 6 mobile phone into 10,000 per mobile phone. 60,000 rupees was the purchase cost. Out of 10, 6 is sold. So 6 ka purchase cost is how much? 60,000. And what is my expenditure? 20,000. So what answer I got? 1 lakh rupees. What is this? Profit. This is profit. If I want to know what is the cash in hand, how much money is there in hand? What is cash in hand? How do you calculate that? Sir, sale. How many mobile phone? 6 mobile phone. Per piece sold for 30,000 rupees. 6 into 30 is 1,80,000. Then you purchased. How much mobile phone you purchased? So 10 mobile phone I purchased. I paid mobile phone 10 ka value. 10 mobile phone into 10,000. How much? 1 lakh. So 1 lakh rupees money spent. And then you spent 20,000 rupees for expenditure. So what is the balance cash in hand? 60,000. So the 60,000 rupees is cash in hand. And this is called as asset. So all the asset, liability and capital. Basically asset means what? Anything that you own is asset. I'll be discussing in next class in detail, but short I'm telling you. So 60,000 is the balance money in hand that I own. So where do you record? Will I record this in P&L? Tell me, if I record the 60,000 in P&L, does it make any sense? This 1 lakh is the profit I earned. This makes sense. This 60,000 calculation, what I did is to only find out what is the money in hand. How much money is there in my bank? So like that, you do the calculations and those items which got the favor of asset, liability and capital will go to balance sheet. So why are we preparing balance sheet? To find out the financial position. So what is the meaning of financial position? You'll understand in the upcoming class. Now, ultimately the accounts what you're preparing, that is identifying of business financial transaction, measuring in terms of money, recording in journal, classifying ledger, summarizing in trial balance. All this drama, why did you do? To find out the financial performance and financial position. So ultimately account is prepared for what? To find out the financial performance and financial position. So these are the two ultimate document that I want. The first document that I want from you as accountant is the trading and P&L account. Because in that I'll get to know my profits. Second document I want from you is balance sheet. In that I'll get to know the positions of my asset, liability and capital. So these two documents put together is called as financial statement. These two documents put together is called as financial statement. Each and every word that I'm using today, people, is something you'll come across in continuous 11th standard and 12th standard. I'm not teaching you something out of proportion. Just because I'm CA, don't think that whatever is there in CA or whatever I've learned in CA, everything I'm putting it across. No. I'm only teaching what is required at your level, but in a very detailed manner. Give her water. So these two documents put together is called as financial statement. financial statement of business is called as report card of the business. With report card, what does come in your mind? Sir, our report card. 10th report card. Now we are going to 11th. So 11th report card will come. Next year, 12th report card will come. Sir, in our report card, there's nothing good to tell, sir. Everything is F, F, F. F stands for not what you think. F stands for fail. Correct, no? Sir, we have no good results. You would have thought food. Because for me, F means what comes in mind, food. For 40%, that only I'll think of. But it is not. It is fail, fail, fail. What others thought, I don't know. But I'm a foodie person, I'll think of food only. So how many of you have got such beautiful red color in 10th standard? Nobody. Hey, before pre-boards or pre-boards, you have got failing marks. I was telling you. Now, our target is, so from red, it should be green. Pass. At least in my subject. Others, you do whatever you want to do. Accounts, at least it should be green mark. Okay. So how report card in your school measures your performance, your position. Same way, this financial statement is a report card of the business, which will reflect the performance of the business and the position where they stand in the business. And once you get the financial statement, will you stop with that? Sir, no. With this statement, we do further analysis. Based on this, we'll analyze. There are multiple tools of analysis. Comparative size statement, common size statement, cash flow analysis, ratio analysis, n number of analysis is there. All this we learn in 12th standard. So in 12th standard, we learn all the analysis? No. So many analysis. In that, they've picked and given you top few analysis. So why are we doing this analysis? So that the owner can know where they are standing and to improve further in future, what action needs to be taken. So analysis is a huge topic. Analysis got a lot of mathematical formulas coming into picture, which we don't have to worry so much. Now, once you analyze, what do you do after this? It does not end here. After that, finally, you have to communicate this to the users of financial statement. Financial statement, who's preparing? The chart accountant. Who's analyzing the financial statement? Chart accountant. So owner of the business, should I not know what is the result of it? So who will communicate to me? My business's chart accountant will communicate the information to me. So with the communication, the accounting process ends. So what I discussed so far is the process of accounting. Accounting process begins with identifying, ends with communicating. So this is called as accounting cycle. If I have to relate this accounting cycle, I can relate it to your English language. Remember when you studied for the very first time, pre-KG. In pre-KG, your school teacher said, please write sentence. Please write letters. Did they start with that? No, they started with alphabets. A, B, C, D. Correct, no? Then gradually when you came to LKG, UKG or first standard, the school teachers taught you how to put the alphabets into meaningful words. How to use the letters to form the meaningful word. Then as you climbed up the grades, then the school teachers taught how these words can be constructed into beautiful sentences. Then as you crawled up, they taught how the sentences could be converted to paragraphs. So paragraph writing was there. Correct? With that, they stopped. Now people who want to become author, who want to write books and all. So what they do, these paragraphs, they will try to make a meaningful chapters out of it. They'll have a concept and based on that, they'll develop the chapters. And these chapters, multiple chapters, you write it down, it becomes book. Like your accounting book, multiple chapters. Economics books, multiple chapters. So this cycle you followed. So it started with alphabet, ended with book. So same way, this is also accounting cycle or accounting process begins with identification, ends with communication. This is the accounting process. This is called as accounting cycle. Any difficulty here? So identifying a business financial transaction. You have to check whether this is related to business, whether there's a monetary value attached to it. And this business financial transaction should have an impact on the financial statement, whether the financial statement is getting changed. For example, I buy the goods, purchase. So this transaction, can I say it will affect my trading and P&L account? Because trading and P&L account records what? Income gain, expense loss. Purchase is my expense. So I purchased first 1 lakh. I record this 1 lakh in trading account. If I further buy 1 lakh worth of goods, now my total purchase is how much? 2 lakh. So the second purchase, what I do, can I say it is changing my financial statement? Yes. Then this is a transaction to be captured in the accounts. I gave an example where I'm appointing a staff. By appointing the staff, will there be any change in the expenses? Sir, if I pay salary, then yes. But by signing the contract, when I'm signing the contract, this is a transaction. Is that resulting into change in financial statement? No. So we don't capture it. So while identifying a business financial transaction, these 3 points also have to keep in mind. These 3 steps I'll teach when I come to journal. Am I clear with this point? So what is accounting, sir? Accounting is a systematic process of identifying a business financial transaction and event, measuring in terms of money, that is common denomination, recording through journal, classifying through ledger, summarizing in form of trial balance, P&L and balance sheet, and then analyzing the financial statement and communicating finally the financial information to the users of the financial statement. Who are the user? There's so many users. I gave you example: owner, investor, income tax department, banker, etc. So are we able to roughly understand what is accounting? In last class, we understood accounting in simple language. Today, little bit more complicated. So as and when we go, little bit more complications will increase. We are not humble baby to do everything easy. So everything will be complicated from here on. To an extent where we'll go, mad. But that is other students, not our students. We'll have a comfortable smile throughout the session. So what is the need of accounting, sir? There are multiple needs of accounting. In that, the 2 primary need of accounting is to evaluate the financial performance and to evaluate the financial position. Evaluate means what? Ascertain. To ascertain means what? To know what is the financial performance and to know what is the financial position. So financial performance is ascertained by preparing trading and P&L account. So what is the performance of the business? How do you measure the performance of the business? By knowing the profit and loss of the business. So to ascertain, what is the need of accounting? First, to know the financial performance. What does the financial performance means here? To know the profit and loss. From which statement or through which statement will you get to know your profit and loss? Trading and P&L account. In this trading and P&L account, what all data you capture? So you capture all the data which has got the flavor of income, gain, expense, and losses. So second, you are preparing accounts or you're doing accounts to know the financial position. Means what? To identify the solvency and the liquidity position. So what is solvency? What is liquidity? You'll understand 12th standard. When I do the ratio analysis, that time you'll understand. So how do I know the financial position? By preparing the balance sheet. So in the balance sheet, what do I record? You record all the accounts which has got the flavor of asset, capital, and liability. In one day, you cannot understand accounts. It takes multiple years. So gradually you'll understand. So today, a lot of things might not make sense. You might be knowing a lot of things. You have a lot of dots. When you complete the 11th with me, you'll be able to connect the dots. And once you connect the dot, you'll get a beautiful image. You'll get a beautiful understanding. So it takes time. So I don't say that today you've understood accounting, everything. No. Today you've just started to understand the accounts. So again, so many of these points, if I repeat, it'll go very nicely and sit in your mind. One more important point. Sir, what is the period of accounting? Sir, we have calendar year, Jan to December. But in accounting, the period begins with April, ends with March. So can we follow an accounting period different from April to March? Yes. You can follow the calendar itself, Jan to December, any period. But in India, people will not follow that because the income tax department very clearly said that we want only April to March. So if an accounting person is following different period, Jan to December, so he has to prepare accounts twice. One for the period Jan to December for the accounting purpose, and for the income tax department, April to March, again 2 times. So who will sit and work like donkey twice? So what we said that income tax department is saying April to March, no. In accounts also, let's do April to March. Finished. Now the question is, sir, why do we have the accounting period? Imagine if the accounting period is not happened. What if accounting period is not there? What happened? So you started the business here. When you start the business, do you start with the intention that oh, tomorrow I'll close, or 1 year after that I'll close, or 3 years later I'll close? Do you start with that intention mindset? No. You want to start the business on a positive note, and you want to continue this business as much as possible, as long as possible. So imagine if this accounting period is not there, you'll keep on doing the business. This is 1 year, this is 2 years, this is 3 years, this is 4 years, this is 5 years, keeps on going. But the accounting period norm was not there. The rule of accounting period was not there. You will not stop. You will keep on doing the business. So as a owner, how will I know the performance of my business? As an income tax department, how will I know what tax I should receive? As the banker, how will they know what is the profit of this business? Because you're keeping on continuously accounting. No? From now, continuous next 10 years, you keep on accounting. You tell my profit is 10 crores. Is the profit is for 10 crore? Or is it the profit for 8 years? Is it the 10 crore profit of 6 years? Is it the profit of 2 years? How do we know, boss? So they said that nothing doing, business, let it continue forever. But you have to break the business accounting cycle. You have to break down the business for accounting purpose. Business will not stop, but accountant has to cut off. So he says that April you start the business, March is the year end. So accounting begins with April, ends with March. Account begins with April, ends with March. So next day, April 1st, when you account, you have to start the accounts in the new books. You have to start in the new books. In other words, if I have to say, this is one accounting year, and this is another accounting year. So this is April. So April, you start the accounting. March 31st of March, you ended. 1 April, you started. So 31st March, you ended. So whatever transaction happened on 31st March, you record on 31st of March in that old book, over. Next day is what? 1st of April. You have to record this in the new book. So new transaction for the new year to get my new profit of next year. So this breaking down is called as accounting period concept, which you'll study in the 3rd chapter later. This concept called as accounting period concept. Means what that concept says that every businessman has to break down the accounting period in terms of 12 months. Each accounting period should be for 12 months. So if I'm starting in April, ending with March, what is the accounting period? 12 months. Sir, what if I start business in middle, sir? 110. So you're starting in middle, then how 12 months will come? So from 110 to 31, how many months? October, November, December, Jan, Feb, March, 6 months. So for the first year of the business, the accounting period is for 6 months. But second year onwards, it is 12 months. Right? One more point. Now this is calendar year. This is calendar year. Jan. Let's suppose we are in 2023. So 1 Jan 2023. Let's say this is 1/1/23. Calendar year. So calendar year ends when? 31/12/23. 31/12/23. So next calendar year will begin when? 1/4. Sorry, not 23. 3 only. Sorry. 23 only. So this is 1/1/24. I'm talking about calendar year. You understand what is calendar year? Jan to December. So 1/1/24 ends when? 31 December 24. Calendar year. So this is Jan to December. Jan to December. You can follow this calendar year. If you follow this calendar year as accounting year, so this accounting year is referred to as 2023. This is referred to as 2024. If somebody asks you what is accounting period, if your accounting period starts with Jan, ends with December, then you say my accounting period is 2023. My accounting period is 2024. But if you follow the period which is given by the Income Tax Act, Income Tax Department, there it is 1/4/23, ends with 31/3/24. Correct? No? This is January, February, March, over. Begins with what? April. So Income Tax Department says that the financial year begins with 1 April. 12 months if I calculate, when does the 12 months get over? 31/3. So Jan, Feb, March. So 31/3 year ends. So if somebody asks you, what is your accounting period? You say that, sir, we are following from April to March. So what is accounting year? If they ask, what do you say? You will not say 23. You will not say 24. You will say 23/24. Because one part of it is falling in 2023. The second part is falling in 2024. And we refer to this as 23/24. So 23/24, if the accounting period is given, what does this mean? We started with 1 April 23, ended with 31st March 24. Now, why this I'm explaining? Because you will come across this in every single question. So sometimes the financial year, the accounting period is 23/24. Means what? Starts with 1/4/23, goes up to 31/3/24. Sometimes the accounting period, they will say only 2023 and leave it. In that it is starting with 1/1/23, ends with 31/12/23, not 24, 23. So this accounting period will come across every question in 11th, every question in 12th. In this, if you have any doubts, please ask me now. What is a period of accounting? Accounting is generally done for a financial year. So here we don't call as calendar year. That April to March or Jan to December in accounts, we call it as financial year. We don't call calendar year. We call it as financial year, which typically starts from April and ends with March. So we are into which current financial year? What is our current financial year? We are in 2024. So what is this financial year? 1/4/24.
24-25.
24/25. But date 1/4/24 to
31/3/20.
31st.
21st March
24.
25. So somebody asked in accounting, your teacher asked, we are into which financial year? 24/25. Starts with 1/4/24, ends with 31/3/25. So April to March, April to March, April to March. Today's dinner, if you want, you can forget to eat, but not this financial year. Correct, no? Okay. Anything else pending? This part I said you I'll cover in the journal. Transaction done, event also done. So if I have to give a summary, transaction is the performance of an act. An activity which takes place in the first instance is called as transaction, and the result of the transaction is called as event. So everything we discussed coming from the beginning. What is accounting from layman point of view? Why accounting? Why accounting rules we discussed? We discussed who this gentleman is. I have no idea who this is. So don't ask me. I have no idea. I'm not able to understand whether it's male or female also. So don't question. I don't know. So we understood a brief description about the author. We understood what is accounting process. Each and every point. Again, this will get repeated in future. We understood what is the need of accounting. What is the period of accounting. Cycle of accounting also is understood. In the cycle of accounting, whatever information I could share now, I shared it. Remaining, you will understand as and when we proceed with the 11th classes, because each and every item here is a separate chapter. So in that chapter, I can better discuss. So today I can only give an overall summary or overall outline of accounting. Tell me people, any difficulty? Online people, any difficulty? Transaction event also done. Comfortable? Makes
No.
sense? No energy. Okay. Online people, comfortable?
Yes, sir.
Yes, sir.
I want each and everyone to respond. Yes. Perfect. You're feeling comfortable now? You're feeling happy? This comfortable happiness, if you restrict to yourself, that is called as selfishness. So how do you spread this comfortability and happiness? How? You will not teach your friends. I will teach. So what are you supposed to do? Inform them. There's a nice, sweet gentleman who's taking accounting in rock style, solid style. So you should learn from him. So what will you do? Each and every one of you have a target to bring 5 more people of your friends. Each one 5. So next 10 classes. By the time we start next 10 classes, this should be full. Whose responsibility is to full? Mine or yours? Hello, sirs or students? So I have given the responsibility. You take care of that. My responsibility is to teach accounting for all of you, which I will do it. Am I a good teacher? Nobody is saying okay. I'm not a good. Okay.
Yes,
Good
sir.
teacher. Online people. Am I a good teacher?
Yes, sir.
Yes, sir.
Very good. Thank you so much. So we'll keep the same momentum going in. Learn always with smile and happiness. That way you will learn also. The pain also will not be known. Correct? No? Always smile. Beautiful smile. No, not smiling. These 2 girls not even smiling. And now it's better. Okay? I'm watching each and every one of you. Who is smiling? Who's not smiling? Who's listening? Who's not listening? Who's paying attention? Who's watching the fan and ceiling? Everything I'm observing. You come and sit from here. Full view I can see. So nothing can escape. If this view goes off, I have that view. What is that view? Anita ma'am from camera, she's seeing. Nobody can escape. Okay? Chalo. On that positive note, let me sum up today's class, guys. That's all from my side for today's session. I'll see you on the next class, which is on Thursday, 7 p.m. sharp. Until then, bye. See you. Take care. All right, people, thank you so much.
Thank you, sir.
Thank you, sir.
Thank you.